Hi guys, and welcome to our weekly video. So today I'm going to talk about dollar index. It's going to be an in-depth analysis on what the dollar has been doing probably since the beginning of the year, and how we can apply that to our trading in the coming week, 2 weeks, or the rest of the year. So when we come to the chart quickly, right, as you can see, I've got a blank monthly chart of dollar index. So this is our September 2021 dollar index futures chart. Now when we look at this chart, we can clearly see that since January we had this bullish order block right here that has provided support 2 times. When price came back to that range, it provided support firstly here, and secondly last month in June. And prior to all those moves, this first rally and the second rally that we have seen, prior to that I had been strong bullish, if you recall, from January, and strong bullish, if you recall, again towards the end of May. Now what have we seen so far regarding the dollar? Now if we take a glimpse on the COT report quickly, right? Now I know this is numbers, and most people, they don't like to deal with numbers. They don't like to analyze what the number is telling them. Now you can clearly see when we look at the commercials, right, their net position, right? So their net position is the difference between the long and the short, right? Their net positions have been decreasing, right, from an extreme net long, net short, right? They were extremely net short, but this number has been decreasing up until 15th of June, right? And if we go to the chart on 15th of June, right, let's go to the chart quickly. June is right. So this is 18, 17, 16, 15. You can see up until the 15th of June, price was in a consolidation on that monthly bullish order block. And then on the 16th, we had an expansion for the next 3 days, right? And what does the COT report says? They were decreasing their net short positions, right? They were being reduced, meaning they were looking to push price to the upside. But now see what happened now on the 26th of June, right? On the 26th of June, we had the commercials increasing again their net short positions, and massively so. In the past 2 weeks, they've jumped from 4,000 to 13,000, 13,000 to 16,000 net short positions. And what are the commercials doing in the meantime? Nothing much, except for the past 2 weeks or so, they've increased their net long positions. Now we know the commercials, they hedge against the non-commercials, and in most cases the commercials always hold an upper hand of almost 2:1. Now when we look at previous weeks open interest, it didn't move much. So what does that mean? It didn't move much. That means don't expect the dollar to move rapidly in this current week or so. Why is that? When we go back to our monthly chart, right, we have this interesting price action here. These two relatively equal highs. Yes, they are not the same price, but in terms of technical analysis, those are relatively two equal highs. And when we take the high of March, the high of March came in at 93,460, right? Now I'm going to mark that price point because it's of interest to our analysis. So the high is coming in at 93,460. That should be the price point here. 93,460. That's the high of March. Now, if you look at current price action, you can clearly see that momentum is pushing to the upside, which is correct. Momentum is pushing to the upside. We have a strong bullish momentum. And sentiment right now on dollar is that dollar is going to keep getting stronger. Now, when we trade as institutional traders, yes, dollar is getting stronger, but expect it to find some resistance, especially when it approaches this price point here of 93,460. Expect dollar to find support or find resistance around 93,460, which is the relatively equal highs. Now, what lies above this price point? We've got buy stops. So what I'm gonna do, right? In fact, what I'll be doing in this weekly video, guys, is something that I normally do, like on a Sunday. So it's of essence, very high essence, that you also try to follow the same structure, the same way that I look at price action. So this is external range liquidity, right, in the form of buy stops, right, that lies above this range here. Now we can clearly see that that's where dollar is heading. Now coming back to the COT report, right, we have seen the commercials are being extremely net short. They are becoming extremely net short as price is heading into what? Into an area of resistance, into an area of supply. You see how the two now gel together. Now, when we also look at the price action, we can see we've got a fair value gap right down here, right? The current low and May's high. There's a fair value gap right between. That makes much of June's price range a liquidity void. Now, that's also important to take note, right? Because we've got internal range liquidity in the form of sell stops below 91.40. Now, coming back again to the COT number, it's crucial you understand the number that's coming. Now you can see the past 3 weeks, the commercials, they reduced their long exposure the past 3 weeks on dollar. Then suddenly there's a jump. There's a jump in their long positions by about 300 points, right? But they're still adding shorts to their holdings, right? What does this tell us? It tells us they are looking to hold a bit in terms of the bullish momentum. So we could see dollar trading in a range or face a bit of resistance from the sellers that are above 93,460. Now, I'm not going to talk about the price action from January 2018 because price has already left that point. I'm going to talk about what to look forward to. Now, if you remember correctly, 93,460 is our ultimate target right now on dollar index. We've already reached 92,250, which was also one of our targets. Now, do we really expect dollar to trade above 93,460? Yes, that's going to happen at some point in the next month, or in the current month, or next month. But do we expect it to just blast through? No, it's going to face stiff resistance. Now, what other area of interest do we have to take note of on the monthly chart? This high. So the high of November 2020, this high is going to provide liquidity when market trades to that level. It's going to provide liquidity in the form of buy stops, right? Now, we will just highlight that price point. We're not gonna talk much about it because there's still a bit of a huge range for us to start talking about 94 on dollar index. Now, once you've done this, right, you already have a clear picture of what dollar is likely to do. Now remember, you are trading alongside the institutions. You're not trading as a retail trader. You must see things that other people do not see. Now, once you have done that, you can see that the likelihood of dollar trading to 93,460 is very high. What do you need to support that? Now, in the following 2 weeks, you need to see them increasing their long exposure, and the non-commercials not doing much, right? They are already extremely net long. You can see here, net long by about 11,000 positions, and the commercials, they're extremely net short. So for price to trade to around 93,460, number one, you need to see the number for dollar index on COT report for the commercials to be increasing their long exposure. Number two, when you come to the economic calendar, right, that's number two. We're gonna look for fundamentals, especially for the dollar, right? Because those are the ones that are going to have an impact on dollar index. So you can see today is all gone right now. So Tuesday, which is tomorrow, for the dollar, we've got the building permits. Expect the dollar to trend as we head into New York Open. Then Wednesday we also have the crude oil inventories. That's definitely gonna be a volatility indicator for dollar. Then Thursday we've got Euro ECB monetary policy, right? They also have their rate decision that is gonna move dollar also, depending on what the ECB forecast is for the Euro zone. Then we also have existing home sales for the month of June. They're not going to change much, and dollar will be trending, whether to the upside or downside, not yet sure, because I haven't read the price action. Then on Friday we got service PMIs. The service PMIs, they'll definitely move the dollar. And we also have the German manufacturing that is gonna have a huge impact on euro, which in turn moves the dollar. Now, coming back to the chart, we've already seen what fundamentals lie ahead. I would expect dollar to trade a bit higher, but once it does that, it has to face a bit of resistance, especially in daily or weekly premium arrays. Dollar will face stiff resistance on weekly and daily premium arrays. Why do I mention those two? Because when you look at the monthly chart, we don't have much in terms of institutional order flow. Our PD metrics, PD array metrics, we don't have much in terms of premium that is going to provide resistance on a monthly chart. But on a weekly chart, which is where we're gonna go now. You can clearly see that we've got this bearish order block, and price is right at the 50% mean threshold of this weekly bearish order block. Now, are we gonna see dollar trade above without any resistance? No. We are going to see some bit of resistance at this price point. If it happens that we trade above 93.023, if it happens that we trade above that price point, then expect this external range liquidity to be taken out. Now above here we also have external range liquidity, and also here. Now this is now on the weekly chart. Remember, I highlighted the first ones when I was on the monthly chart. So now this is the weekly chart. We already have a bearish order block there, which I expect price to find resistance. Now that means today's price action is crucial for whether we are going to see resistance in this area. Now once we've done that, this is our weekly chart, right? We've got this fair value gap here. That one was filled already. Yes, this fair value gap has been filled. Price traded up. Yeah, we don't have any fair value gap there. There isn't much of a fair value gap for us to take note of. So the one we had was this, and price has filled that one time. First resistance, second time resistance, third time it didn't face any resistance. But you see the price action of today. Last week did not take out previous week's high. Today, exactly when the market opened, market took out that high. These two highs, they were taken out. What was above that? Buy stops, engineering short liquidity for market to move to the downside. Now I'm gonna go on to the daily. Now remember, the gray shaded area is our weekly bearish order block. Price trading inside this liquidity void here, which is nested inside our bearish order block. Is there any premium areas up here to take note of for price to face resistance on the daily? No, most probably on H4. Now you see this price action that's happening here, and when you look at the COT number for dollar, this is when they were increasing their net short positions. And when you see this price action, what is it telling you, right? Remember, I mentioned that expect a bit of correction on dollar. Where do you expect that correction to head to? I'm gonna switch back to my monthly chart. This range where the fair value gap is, right? So don't be shocked if you see, say, the month of July close bearish, right? Especially if we take out the buy stops above 93.460. I will be short term bearish on dollar if we take out those buy stops. If we don't, then I'll still be extremely net long on dollar index. So once you see that, okay, on the daily we've got this bullish order block here. You see this one. Now this is daily now. You see. Right, we've got this daily bearish order block. It's not a bullish, it's a bearish order block, and see how price is reacting, right? It's not a coincidence. Yes, we had a very big move today since market opened. We moved like 33, 35 pips on dollar index, which is huge because you can see the effect that it had on these other pairs here, especially pound USD. It eventually crashed to the downside. Now the daily bearish order block is providing resistance on dollar index, right? Now this is what I was saying, you need to see daily or weekly premium areas providing resistance. Now you can clearly see that 92,950, our institutional price point. This price is going to provide resistance for the rest of the week. Now if you are shorting dollar index, you need to have your stop above 93.50, right? You need to have your stop above 93.50, because the chances of price trading to 93.450, they are very 93.445, so that's 93.446. the chances are very high, and you don't want your stop to be too tight above that price point, right? You don't want your stop to be just above. You need to have at least leverage in terms of your stop. So I'm expecting this price point here to provide resistance. Yes, tomorrow we might see another leg up to the upside, but expect the market to trade lower in this week on dollar index. Of course, fundamentals, they're going to play a huge part in how we trade this pair. Fundamentals are going to play a huge part, because we could likely see a proper continuation to the upside without any resistance. But I'll be highlighting that now in the group. You see, I'll be highlighting that in the group so that you know how to link the fundamentals coming out, because we might get some extremely positive news for the dollar from those calendar fundamentals that I showed you. We might get some extremely positive news, and price could really shoot all the way to 93,500, 93 or 94 price point. But for us to reach 94, I'm still expecting another correction to the ups, to the downside, before we could massively take off all the way to 94,250. So that's what I wanted to share with you guys, so that you get to understand properly how we are going to trade the dollar. As you can see, this is now the hourly chart. Now take note of 92,950. 92,950, that's the price point that I'm saying we should expect price to face huge resistance. 92,895, which is the proximal line for our daily supply. If I come to here, you see this price point here, we've got a proximal line right around 92,895. Is also ideal shorting position. So short term, we are going to be looking for bearish signs on dollar index, but that does not negate us trading to the upside if we get positive fundamentals regarding the dollar from the United States. So this is what I wanted to share with you guys, so that you understand how I look at these charts, how I come to decide what to do on dollar index, which ultimately helps me in trading the majors, those 7 currency pairs. Now the other thing which I had forgot to tell you guys is it's an always paramount essence that you look at the bond market, right? You need to look at the treasury bond futures, right? Especially the 10-year T-note, and on the bond yields you need to also look at the treasury US 10-year yields, right? You can see today they dropped massively. They're trading under 1.2. that is huge for the dollar, because if we go to the chart, right, if we go to the chart for the 10-year bond yield, let's just open the chart quickly so that you can see what that effect does to dollar index. This is huge, you see. And when I said take note of this price action, remember there was this fair value gap right here between this low and this high, price filled it. That was last week, and we found resistance. Remember, I said take note of that price action and look at the sell-off that happened after that. Market sold off big time, and this is not a good sign in terms of the dollar, right? It's not a good sign at all. It's a sign whereby we will likely see dollar trade to the downside. So what you have to do now for your homework is to look at pound USD, euro USD, Aussie dollar, New Zealand dollar for setups, for price to trade into discount, so that you are long on those assets. And then you also look at USD JPY, USD CAD, and USD CHF for price to trade into what? Into premium for you to be a seller. Already you can see USD JPY gave us a clue, right? USD JPY, you see how it dropped. This is today only, yet we saw dollar trading to the upside, yet the yen is trading lower. Unlike the two, remember USD JPY and dollar index, they are correlated. When dollar moves up, USD JPY must trade to the upside, but we have seen a huge sell-off on the yen. That's a telltale sign that you need to understand. There's no way euro USD and USD JPY must all trade to the downside. There's no way USD JPY and pound USD must all trade to the downside. You should be in a position to recognize this. So yeah, that's pretty much about it, guys. Let me not take much of your time. 30 minutes is long enough for you to watch the video and digest what I've talked about. So if you haven't subscribed to the channel, unfortunately you're only gonna see this video Thursday, probably New York open or London open if I don't forget to make it public. So if you wanna get it Monday before New York close, just get in touch with us or join the mentorship program. And if you haven't subscribed, if you haven't subscribed to the channel, make sure you do, and make sure you have the notification icon selected so that you don't miss some of the material that I upload on the channel. So yeah, with that, guys, I wish you good luck and happy trading. Thank you.